You know what? Let's just dive into this fully.
You just cut her off.
I did, but I want to ask you a question, but I also want to give you credit here. So the question is, why is it that, when the Feds cut the rates, it's like every day since then, the rates have been going up. And the credit to you is you warned everybody this was going to happen. They needed to lock. And the ones that didn't listen are now reaping the non-benefits.
Yeah, you even pre-explained it, right?
Yep.
When all this was going on, when the Feds announced that, you pre-explained it. But, as many of us do, we don't really listen to
Until
things
it
that we don't
applies.
easily understand.
Yeah.
So now we're asking again.
Yep. And answer this question in a way that if the next Fed meeting is expected to lower rates, that people will actually understand that that means that when the rates get lowered, that doesn't mean that they're going to start going down afterwards. So it's all on you.
Now we're not going to interrupt.
Yes, we'll be quiet.
Yeah, let me tell you. So I have this client right now. She's still floating, and she said, "I feel like gambling." So okay, well, I can't do anything about it. If you feel like gambling, you gamble. I don't feel like gambling right now. So here's what happened. So the rates, we expected that Fed is going to lower the rate. It was just 100%.
Yep.
So rates dropped. So now they're going up.
Prior.
As we know that mortgage rates they don't really depend on Fed cutting rates, right? So it was sort of, the good news that they're going to cut because inflation is going down. So when inflation is going down, the rates are going down. But now they're more to mortgage rate than just Fed lowering the prime rate, right? So first, we have big news that there is increase in conflict in Middle East, right, between Iran, Israel, Lebanon. So typically, all geopolitical tensions would be good for bonds because interest rates are tied to bonds, and it's kind of like a safe haven for investors when there's a geopolitical tension going on. It's safer to invest into bonds, so the all money flowing into bonds, and that helps the interest rates to go down. However, with increased tension in Middle East, also it pushes oil prices higher, which they did, and higher oil prices are inflammatory and bad for long-term bond like mortgages. So that's something that triggered the rates to go up. Also, the mortgage rates, more bad news for ports in East and Coast Gulf regions because they initiated strikes, and potentially, that could lead to shortage in certain products, and could lead to temporary rise in prices. So that may result in slower economic growth for upcoming months. So that they look at that as well. Also, the mortgage rates kind of like they shift gears, and actually Fed they look more to job reports, right? So the labor market numbers, and the labor market numbers went up, which actually it's a good news in general but it's bad news for mortgage rates, because when there are more jobs reported, then economy is doing better. So investors put more money into stocks, not bonds, and that's not good for the interest rates. So the good news is bad news for the mortgage rates in this instance. And also the last week, the Fed chairman, Jerome Powell, he said that most likely they're not going to cut rates. So that's also not a positive data for us. So the bottom line, good news is bad news for bonds, and opposite is true, right? So, and any further improvements in interest rates will likely require some softening in economic data as interest rates improve slightly in anticipation of the first cut. So now they're looking at some other aspects of economy, and that's what happens. So
Okay. So basically, unless you're an economist and you like spend all your time looking at this stuff, you need to talk to your loan consultant, because they're in the know of this stuff and they can take all these things into account to kind of try to at least understand what may happen with the interest rate. Nobody has a crystal ball, right? So you can't predict it, but at least you have a knowledge of what could happen, as you proved. If we go back and look at, the mortgage minutes right before the rate cuts, you were telling people, lock it now, lock it now.
Yeah.
And we had several buyers that were sitting on the fence, and I explained this to them and I sent them our videos, but they're like, no, they're going to come down afterwards.
Yeah, because they thought, well, if they came down before they announced it, they're going to come down even lower after. And it's like, no, it doesn't work like that. Because the mortgage rates are based on all of the, correct me if I'm wrong, Tatiana, but if I'm understanding, are based on the commentary across the board with the Fed rates, the unemployment, you're talking about the gas prices, the wars, the layoffs or strikes and everything else, that it's all of it combined, that people take in all this information and then they say, okay, this is what we're doing mortgage rates.
Yep.
Exactly. And not to even mention coming up election, right?
Yeah.
So that is also so I don't know, it's just I think people Google a lot. I guess you need to Google right sites.
That's what my doctor keeps telling me.
Yeah, Dr. Google.
Dr. Google.
Yeah. So that's the thing, is just got to listen to what's, and that's why we do these market reports, so people can be armed with like truthful information at the most real time as possible. But it's a constant battle. Same thing in the real estate market. It's a constant battle when somebody says, some expert says the market's about to crash, so everybody pulls back, and it's like it does the opposite, and it's just a constant battle.
And you don't have to be in like an official agreement with Tatiana to ask her questions and for her to tell you what's happening and to explain things. I've never had anyone explain things as well as you do. In this whole like arena of mortgage lending and loans and what to expect and everything. So let everybody know how to reach you.
Call me at 571-245-3000.
Yes.
Right.
And I'll explain everything again.
That's right.
As many times as it takes.
All right. We'll see you on next week's video.
I'll see you soon. Bye.